And good morning, everybody. It is Tuesday, April 6th, 2021. Hope everybody is doing well. We have a special Tuesday edition of Cowboy Medals for you guys. Normally, we'll do this live stream at 1 p.m. on Sunday, Central Time, because I'm here in Texas. But I was out of town this weekend on some business and having a little bit of fun in Las Vegas. And I found something interesting while I was out there I wanted to share with you guys. So this week only, we're going to have a special Tuesday edition of Cowboy Medals. Then we'll return to our normal Sunday time slot. So basically, this week I went out to Vegas to hang out with some friends and some business partners and blow off a little steam and have a little bit of fun. And we noticed a couple of things right off the bat. I was in Vegas a few months ago, and it was really slow. We basically had a run of the place. There weren't a lot of people out there, understandably because of the shutdowns. But Vegas had not returned to normal. Had returned to Vegas. But we went out there this time, and it was spring break weekend or spring break week, and it's very busy. Lots of people were there in Vegas. It was a lot of fun, a lot of excitement. Most of the dining places had opened up, and the bars had finally opened back up. So it got the feel of what Vegas really is. And the one thing we noticed, though, is we couldn't get transportation. I could find no one to drive us around, essentially. And whether it be cabs or Uber or Lyft, I have Uber and Lyft on my phone. I couldn't get them to show up. We would do an Uber or a Lyft, and we'd sit there and wait for 20 minutes, and then someone would accept, and then they would cancel. It was a really strange thing. I've never been to Vegas and had that happen. So usually I'll take an Uber or a Lyft, but I thought, okay, well, we'll stop by the taxi stand. So several hotels, we went by their taxi stands, and we would wait 15, 20, 30 minutes to get a taxi, just right off the hotel at the taxi stand. It really got down to the point where he had to run down the street and flag down a taxi when they were dropping somebody else off. And as soon as we, saw somebody being dropped off, it became this race where everybody would attack that taxi to see if they could get a ride. So we're wondering what's going on. It's really hard to get around. We're having to walk to a bunch of places. It's not a big deal. I enjoy the walk, especially up and down the strip of Las Vegas, but it's about 90 degrees outside, getting kind of warm as it does in Vegas this time of year. So we were interested in having transportation, so we wouldn't be sweating and stuff by the time we get to our destination. So I asked one of the cab drivers, I'm like, hey man, what's going on? Like, you guys must be super busy because I'm not seeing, the Uber show up. Like people are either rejecting our rides or they're never accepting the rides. And I'm right here in the middle of the strip. What's going on? And he said, Rob, what's going on is with that stimulus check the government put out, nobody wants to work. Everybody wants to stay at home, and they want to stay at home and play video games, he said. And I said, really? It's like, yeah, all my friends are at home playing video games. And I'm like, why are they at home playing video games? If there's so much business out here, why aren't they out here making money? He's like, well, I am. I'm making money hand over fist. So the guys that did show up, the cab drivers, the Uber drivers, are basically calling their shots on how much they wanted to make, right? The cab drivers were busy all day long. He's like, I'm making more money I've ever made in Vegas. He'd been in Vegas for 30 years. He's like, he had never seen it like this before in 30 years, where it was so busy there weren't enough cabs. And so he was constantly having fares. It was great for him. And I said, well, if it's so great for everybody, why don't all your friends want to come out and work? And he's like, nah, I mean, they got the government money. They'd rather stay home and have fun and play video games, because if they go out to work, they don't get those stimulus payments, or they don't get the unemployment. I'm like, okay, but I mean, is unemployment really that great? And is it going to last forever? And he's like, they don't really care. They're just taking the free money now because they know they don't have to work. So it created this amazing opportunity for people who really want to either drive a cab or get in their Uber and drive people around. But unfortunately, I mean, that wasn't the case. Most of the cabbies wanted to stay home. And so what it creates a situation is when the government's issuing a payment, people don't want to work. They want to stay at home. And I'm wondering, if we get into universal basic income and larger government handouts, is that the economy that we're going to be looking at? It's going to be the Las Vegas taxi cab economy, where people don't show up to work. They'd rather stay home and play video games because the government's trying to take care of them. And if so, what happens to our economy? Does the economy cease to exist? Because I can imagine if you go out to Vegas and there's no way to get around, yeah, you could hire a private limo service, but they're expensive, first of all, so not everybody's going to be able to afford them. And secondly, there's only so many of those services. It definitely raised the cost of transportation while we're out there. We finally found an Uber driver who he would work at nights at least. He worked the night shift and would take us around. but his fee was 25 bucks every time we got in his truck. And typically the Uber rides we were taking were 10, 11, $12 rides. But so he was charging over double what the going rate was, because we could call him and he'd come pick us up somewhere. That's a lot of money to kind of get around $25 every time you step out if you want to go to dinner or go shopping or whatever the case may be. So it raised the overall cost of transportation in Vegas. And it was really, really frustrating for a lot of people. They were complaining to hotel concierges, and more people were walking, which is probably not a bad thing. But again, when it gets 90 degrees outside, it's nice to have a cab, right? Especially if you're going to dinner, you don't want to be like drenched in sweat. So anyway, that's the deal that we noticed from Vegas is, the taxi cab economy. And that's a good sign. When the government's handing out money, the cabbers are going to stay at home. And the people that are, working those retail type of jobs, restaurant jobs and stuff may just elect to stay home and not work. And then the question is, what's going to happen to our economy? I honestly don't know, but I know that whenever we've had a sort of socialistic policy or government around the world, and they start doing handouts, this is what happens to the economy. It starts to crash. There's less overall production, less people want to work, less people want to get involved, be entrepreneurial, start their own business. And hopefully that's not what's coming here to the US. But we're going to take a look today at some of the infrastructure costs and how the market is reacting to that. And I'm not so sure that we're not going to see this kind of behavior continue to get worse. And maybe we have not only the Las Vegas taxi cab economy, maybe this becomes the American economy. And that would be a shame, because American economy has been the most productive for such a long time. But I'm just getting this feeling that with more government handouts and the way that people are reacting to them, that we're not going to have the type of economy that we as Americans are used to having. And that's something that'd be interesting to pay attention to. See a lot of you guys here in chat. Thanks for joining. I know we're super early. I usually don't do it this early, but wanted to do it. Just got back from the trip to Vegas and wanted to do it to share my thoughts with you guys, because we didn't get to it on Sunday. Andrew Penfold asks, how many ounces of silver will be a nice start for the RV? Quite a few. Ryan Hogue saying, I can't buy silver on eBay. That does not surprise me at all. Andrew also says, how will silver pass $100 if it's ever past 50? Debt clock says 5K silver. That's true, Andrew. It's going to take a collapse of the system, I think, before silver reaches its true value. And I do think we're in the start of that reset, and we'll continue in the reset as we go along. I don't think it's going to take that long for that to occur. I'm going to go straight into the share screen here with you guys and talk to you about what we're seeing. Get out of my screen there. We're going to jump right into it. Sorry for the delay, guys. I had something open. So I wanted to share a story with you guys on how people are, and the market traders are seeing the economy. We had the recent announcement, the Joe Biden $2 billion stimulus, and that's caused hopes to rise on all of this infrastructure spending on roads and bridges and things like that. So the Dow yesterday climbed 370 points. I saw this article yesterday, to close at a record high amid optimism on the economic recovery. And it says here, U.S. stocks climbed to record highs on Monday as a strong bounce in U.S. job growth and solid data in the services sector raised expectation for a swift economic recovery from the pandemic. Now that seems to be in contrast to what I just said about the Las Vegas taxi economy. But again, that's where there were government handouts where people were staying home. True, there's jobs being created right now. But if the government continues to increase handouts, I think we're going to see more of that Las Vegas cab economy than what we see right now. The Dow Jones Industrial Average rose 373.98 points to 33,527.19, a record closing high. And the S&P gained 1.4% to 4,077.91, also hitting a new record close. The tech-heavy NASDAQ composite also climbed 1.7% to 13,705. So it says here, the Labor Department reported Friday that non-farm payrolls increased by 916,000 in March, the highest since August 20, while the unemployment rate fell to 6%. I wanted to nitpick on this. Actually, it's not nitpicking, it's just telling the truth. The unemployment rate really doesn't mean anything. That's a statistic I covered in my book, The Drop Shadow, back in 2010 when I released it. And it talks about how the government gains their numbers. The real number to look at is the labor force participation rate. We're still at about 63%. That is still 3 percentage points less than the 66% we had during the last financial crisis in 2007, 2008, or before the last financial crisis. We have an additional 3%, what I call structural unemployment, of people not working here in the United States. And so this number right here, the 6%, which is the U3 number reported by economists in the financial media, really means nothing in the long run. It's a stupid government statistic they play around with to make the number look good. But what you really want to look at is the total amount of adults that want to work, that cannot find work in the economy. That's the labor force participation rate, and that's sitting at about 63%. And I've talked about this last year. So despite the fact that the interim job numbers are good, we still have all this structural unemployment of about 37% of Americans who want to work. And that's a very high number. It's the highest it's been in a very long time. We have less overall as a percentage of the population willing to work participation in the labor force than what we have typically had in the US economy. And I think that's why the government's having to spend all of this money on economic recovery and on infrastructure, because you're trying to jumpstart this economy based upon debt, which has reached the end of its life cycle. And I want to take a moment and talk about the deficit tracker. Here we have, this is from the Bipartisan Policy website. Here they've been tracking the deficit that the government runs on a yearly basis. And of course, a deficit means that you're going to have to take on more debt to pay for all that spending. It means you have more spending than you have income from taxes. And most taxes don't go to paying for this stuff anyway. They go to transfer payments to outside parties, but that's another video we'll talk about later. But look at how this jumped up last year due to the pandemic and the shutdowns. And I just got through mentioning the Las Vegas taxi cab economy, where you have these handouts and people are staying home. When the government's giving handouts, it's spending. And with that $1.9 trillion infrastructure coronavirus spending that already has come out by the Biden administration, and the additional $2 trillion that's coming out, we're going to have $4 trillion. So this for the 2021 is going to be off the charts. So we'll have 2 straight years of deficit spending, literally off the charts compared to past history, as they're just trying to pump money into the economy. As it says here, policymakers struggle with reining in the red ink. Even in times of economic growth, the federal government ran large and growing budget deficits near $1 trillion a year. Before the pandemic, it was an ominous trend. Now that policymakers are enacting necessary emergency measures to combat the crisis, federal budget deficits are escalating to levels not seen since World War II. So there's a hint for you that we're at the worst time that we've been in basically since the Great Depression preceding World War II in terms of deficits. And in terms of raw amounts, it's the highest ever seen. But in terms of like percentage amounts, it's as bad as it was in the Great Depression leading up to World War II. And I think right now we're in a massive recession, and not just caused by the quote unquote pandemic that we had last year, but also caused by the exorbitant amount of debt in the system and the inability of that system to pay off the debt. And I think that's currently where we are right now. And that's really a mess. And that is the Las Vegas taxi cab economy, if you will. And that's what happens when the government spends a lot of money. You run deficits, the economy slows down. When the transfer payments come in terms of unemployment and payments to stimulate the economy, you get the exact opposite. You have the taxi cabbers and the retail people, establishments staying home, even in a district like Las Vegas, where you have spring break, it's pumping, there are people out there, and there's a lot of money to be made. People still would rather take the government money and stay home. And that's what's going to happen as the government gets more involved in the economy. More people are going to choose to stay home and not work. Overall economic output's going to come down. And those unemployment number, that labor force participation rate I talked about, is going to continue to come down as well. That's why it's sitting at basically an all-time low, at least the last 100 years. And it's going to continue to get worse. I'm going to go over here to the chat and see what you guys are talking about. I don't see any new questions in the chat. If you guys have questions, ask them down there in the chat, and I'll be happy to address them with you. Looks like we have a couple of comments here. Good afternoon, Rob. Hope you're keeping well. Thank you, Chris. I'm doing very well. Thanks for mentioning. Yes, Nemo, the thing has started. Unemployment is biweekly. A note from Hayden. That is true. How can one say the stimulus checks alone, could they be so fear-stricken about COVID they're unwilling to return to work as well, says Ray Wolf? I think it's possible, although the people I talked to there weren't overly concerned. Everybody was wearing masks. The people in the hospitality industry, I think, are kind of used to the COVID thing. At least I didn't see a lot of comments about that. I did see more comments about, hey, we got our checks, we're staying home. And it wasn't just from the taxi cab driver, because I was chatting with people in restaurants about it, saying, hey, where's everybody? Where's all the service staff? And like, all they're home, because they got the money, and we talked about COVID and everything. But, a lot of people aren't really getting COVID and dying from it. And I don't think that that's what people were more afraid of. At least that's not what they were talking about while I was there. Hey, Yara, how you doing? I did get some recovery sleep last night. In fact, I went to sleep early Sunday night as well. So I've had a couple of good nights of sleep. Gulp0000 says, what is a good amount to have in silver and gold? I think a good amount to have in silver and gold is whatever makes you comfortable. Whatever makes you comfortable, that you'll have the money you need in a long-term economic downturn, that you can pay the bills. Of course, it's different for every single person. If you want to know how much to spend there, we can actually show you. I've got a little calculator on the website. It's a perfect little segue into our calculator. If you guys want to come to the website and sign up for our professional service and become a subscriber by clicking this button here, what you'll do is you'll get access to our Gold Silver Pros University, which has a precious metals calculator in there. So to answer your question, if you want to know how many precious metals to hold, we have calculators that will help you understand what your net income is, what your net worth is. In other words, what you have to protect and how many bills you have to pay. And then it'll calculate for you an amount in gold and silver based on 4 different scenarios, depending on where you think you sit within those scenarios. So it does give you some optionality there, and it's a good guideline for you on the precious metals. That's part of this overall subscription. We also have coming up, guys, the golden quarterly newsletter is coming out for spring of 2021. We're going to have the state of the economy. I'm going to tell you exactly where we are. We're going to get much deeper into the statistics on the economy. And we're going to be taking a look back at the mining stocks. Of course, in January, we released our annual mining stock newsletter, which we're covering over 20 of the mining stocks. We'll be adding several to that this quarter and updating our view on the mining stocks that we had back in January. So if you're interested in the mining stocks, we have that as well. And in addition, last but not least, we have Gold Silver Pros University, in which we have a series of courses for you that you can learn about the economy. So if you're interested in learning more about gold and silver and about the economy and how to track it, how to manage your budget, things like that, this is a part of the overall service as well at our website, goldsilverpros.com, if you want to subscribe. So hopefully that did answer the question for you about how much gold and silver to have. We have that calculator for you there at the website that you can get access to if you're a subscriber. Robert asked, did you get a good tan? And I got a pretty good tan, although I tend to burn. So I put on a lot of sunscreen and try not to get too much direct sun. Of course, there was a pool party out there Sunday, which we went to for a couple hours to relax. I just relaxed by poolside, and we had a good time. Yeah, so it was relaxing. Raymond Carota says, Basel III, everyone seems to believe gold will get revalued. What's evidence is there to support this? Well, we covered that in 4 videos late last year and early this year, Raymond. And so go back and look at those videos. I kind of walk it through for you. But what Basel III does is it increases the overall amount of liquidity of good assets that the banks need to meet new Basel regulations to be considered stable or fully funded, if you will. Or fully funded is not the right word, but fully backed by enough assets as a percentage. Liquid assets as a percentage, they've gotten into trouble, they could liquidate those and survive, essentially. That's what Basel III does. It tightens a lot of things up in the financial sector. They've been having a lot of trouble tightening things up in the financial sector and meeting those requirements, so they keep pushing them out. But one of the requirements has to do with unallocated gold positions and allocated gold positions. And so what's happening is a lot of the central banks especially, but a lot of the commercial banks have been buying gold. And they've been using those in their balance sheets. And as long as that gold is in allocated form, it's not unallocated, but it's allocated, they have access to it, it's theirs, it's in their name, and they have hedging positions on the market to offset price risk, then gold's considered as good an asset as cash is. I would argue long-term it's a lot better than cash, because we know what happens to fiat currencies. They all die eventually, and gold will retain its value when the fiat currency is hyperinflating or it's crashing. But the way the banks, the banking system sees cash as being the ultimate liquid asset, and it will be until it's not. I mean, in the current system, it will be the most liquid asset. But when people don't want it anymore and cash loses its value, that's not reflected in Basel III, by the way. And so what will happen is when you have the dollar run into serious trouble and the euro run into serious trouble and the pound run into serious trouble, those banks are going to rely even more on their gold holdings because gold price will go up, but also gold doesn't tend to lose its value like fiat currencies and die over time. It keeps its value over time. So gold will play a much more prominent role. So I hope that answers that question for you there. Silver as well, I believe, because silver could also be held in monetary form, but it's also used industrially. So silver is extremely important. All right, we're going to jump back into the presentation. I got a little bit more information for you guys here. So we talked about the overall deficit and how the deficit's going up. And they're basically going to have to do quantitative easing to pay for that. They're going to have to print more money to pay for that. And so I want to take a look at the M2 money stock. So we see last year when we basically had the virus hit, we saw this hockey stick uptick in M2 money. And they don't even really want to report on M2 money anymore on the money stock, but we have it here from Fred. And it's just gone vertical. We look at M1 money stock, which is a more conservative look at more liquid forms of currency. And you see literally a vertical line in 2020 of money printing going out the door. And again, when that happens, it usually means it's a death of a currency. There's never been a time in human history in which we have seen this on a chart in terms of liquid currency and not had it hyperinflate and die. And we've got it on two charts here, M2 and M1. So getting back to the value of gold and silver, they protect against the overall failure of the dollar, not only persistent and steady inflation like we've had dating back to 1913 and the creation of the central bank, but also that hyperinflation risk. So again, we've seen that. Here's the currency in circulation, which is a more liquid measure of currency actually being circulated. Of course, that started to go hockey stick last year as well. Of course, that had been rising since the late 1960s, but it went hockey stick as well. So any measure of US currency you want to look at, even the most restrictive, very super liquid amounts, have gone hockey stick. And that's not a good sign for the economy when that happens. So, that's why they're having to give out stimulus, because if you're a taxi cab driver and your currency is being inflated like this and your value is being pushed down, 98% since 1913, it's easier to stay home and take that check than it is to get out and work because you're not making as many dollars as you used to. And how do you support a family driving a cab nowadays? How do you support a family working in a restaurant? Most of that has to do with the dollar. So the taxi cab economy we saw, the retail economy problems we saw in Las Vegas this weekend are really indicative, more long-term, over what's going on with our currency. There's an interesting chart at Nick Laird's side I wanted to go over with you guys. This is U.S. debt and gold percentage growth. Now, I talked about how much debt we're going to have to take on because the $4 trillion that the Biden administration is spending within, or slated to approve and spend within the first quarter of his term. I wanted to see how gold had reacted compared to debt. So gold usually reacts pretty well when you have increasing debt. It'll rise up, although from 2011 to about late 2018, gold had fallen while the debt had steadily increased. And so the gold price has separated from the amount of debt being issued. And I find that very curious because gold is really a hedge against long-term inflation. And in a debt-based economy, debt essentially is money. And when you have that much increasing debt, gold should be going up with it. So gold is nowhere valued where it should be in terms of the amount of debt that we have and in terms of the amount of currency we're printing. If we go back to M2, hockey stick, M1, major hockey stick, currency in circulation, hockey stick there as well. When you look at the amount of currency and the amount of debt as well in circulation, why aren't the gold and silver price going up? They should be. So gold and silver are undervalued right now. I think that's pretty clear, but people are still involved in the stock market. Most people want to put their money in the stock market. And we see another casualty from the Archegos hedge fund scandal. Credit Suisse is set to take a $4.7 billion hit. Last week, Credit Suisse revealed that it was expecting heavy losses in the wake of the meltdown of U.S. hedge fund Archegos Capital. It took a charge of $4.7 billion as a result and now expects a first quarter pre-tax loss of around $964 million. Investment bank CEO Brian Chen and Chief Risk and Compliance Officer Laura Warner will step down from their roles with immediate effect. So heads are rolling there at Credit Suisse. Are going to lose $4.7 billion with an immediate charge of about $1.96 billion. And that, they got involved in a scheme in Archegos, which was a leveraged stock scheme. It was a margin stock scheme and it blew up. Why did it blow up? Interestingly enough, a lot of this traces back to GameStop when Wall Street Bets and those guys were bidding up and other guys got involved in the GameStop AMC. This inflated a lot of the value of a lot of stock portfolios. A lot of those were hedged on margin and didn't have the money behind them. And when the price came back down, a lot of people got margin called and they didn't have the money to pay off those positions. And that's where a lot of these losses are coming from. It's not only the stock market, it was a levered, margined portion of the stock market, which when a lot of those stocks came back down, GameStop and AMC, a couple of them, but some others as well, when some of the stocks retraced, especially those that were being bid up in a frenzy in the market, that's causing this fund, basically this leveraged fund, to go out of business, and all these hits are being taken by these big banks. This is another sign that we're at the end of the current life cycle of the economy. When you have this much rampant speculation based upon margin into the stock market, you have these schemes, and we revealed in our video with Andy last week that Archegos, the guy that was involved in that, got into trouble in China for doing similar stuff, comes over here, does Archegos, wraps it in a Christian theme, because Archegos is a Christian concept. The guy was a Christian, he said. He wrapped it in this theme and built this trust with people. And it was a levered investment that only worked when the stock market went up. But when the stock market went down, because it was levered in margin, the losses were incredible. And that's what we're seeing. So if you're going to be in the stock market, you really have to be careful what you're investing in, who you're investing with, and what funds you go into. But that's also a sign of the end of the stock and bull run. You always see these schemes and these scams when you get to what I call the rampant speculation phase of the stock market. And that's exactly where we are. And Archegos has been an absolute mess. And that's indicative of where the stock market's going to go. Of course, the stock market yesterday reached all-time highs in the S&P and the Dow. But what's that based off of? Is it based off of value? Is it based off of earnings? It's not based off of those things. It's based off of expectations that the Fed is going to print more money, and then we're going to have more debt and all this infrastructure spending. How are we going to pay that? How are we going to pay that down? When you got people staying at home, not wanting to work in retail jobs in Las Vegas, where tourism is the #1 industry, that's a bellwether for the rest of the economy. And again, that labor force participation rate is telling us exactly where we are. It never recovered to pre-2008 levels. Never recovered. Even with all this rampant money spending and all that money creation, all that debt creation, we've never recovered in terms of labor force participation rate. And you're beginning to see it get worse as well. So let's see, do we have any questions in the chat? Hayden Martin says, could this be the black swan that starts things, or is this just a blip? I think the black swan is going to be a bank failure, and it's going to be one probably we don't expect. Everybody's been paying attention the last few years to Deutsche Bank, but I think it could be another one. Could it be Credit Suisse? Sure. The 4.7 billion definitely is a lot, and that's going to cause some dominoes to start to fall, but we really need to see a good intermediate sized bank really lose it, not just take a loss, but just lose it, for things to seize up, for it to really hit the news. I think that'll be the one, that'll be the domino that kind of starts the whole thing, because I think everything's kind of teetering on the edge. It's just going to take one to make people aware of how fragile this market really is. What other questions do we have? Oh, Julia Wee says, repeal the 1930 Act, no federal, no reserve, not a bank. That is correct. Manipulation on a major scale, you are correct. Silverblade says, greed consumes itself. Adam Smith, too, warned of this. Yes, he did. A lot of the economists, the classical economists, warned of too much greed in the system. And when you have over 50% of the voters in the system benefiting from the government handouts, that usually signifies the end of that current political administration, that current economy. And that's where we are. We're way over 50%, way over 50%, where people would rather stay home and play video games than work, even in, think about how long Vegas has been down, over a year, because of the shutdowns. It comes back up, business is booming, and people would rather stay home. It doesn't look good for Vegas in the long run. If I were living in Vegas, I'd probably move out right now. That's not financial advice. It's just what I would do. I don't see that economy ever recovering if that's going to be the attitude of people there, that it makes more sense for them to stay home than to work in tourism, which is your number one facet of your economy. I think that is a prelude to what we're going to see across the rest of the U.S. economy as we continue to get to the very end of this system. Gulp says, it seems to me they're purposely doing this sort of bring about the one world government. That's entirely true. We could talk about that as well. Jose says Europe is getting the worst share. That could entirely be true. If you have comments on Europe, I'd love to hear them. Put those down in the chat. Also, if you guys have more questions, This is what the live stream is for. And we have about 170 people in here. Go ahead and ask your questions. I'll do my best to answer them. Ray Wolf says, but why haven't we seen major inflation during the uptick of money supplies numbers beginning 2008? Has the money supply and inflation been mostly limited to financial and equity markets? Well, yes, a lot of the inflation has gone into the financial and equity markets as well. That's why you're seeing asset price inflation with stocks. And that's why you're seeing so many people chase yield in stocks. And that's why Archegos also is able to, to run this game there, because people want to chase those double-digit gains in the stock market. In fact, they want double-digit gains in just a few short months. It's rampant speculation because a lot of money's gone pumping that up and people think that that's going to last forever. But I also wanted to challenge the fact that maybe we're having inflation in other places as well. So I'm going to go to my good friend's website, John Williams' Shadow Stats. We had him on the program last year. I definitely will have him on the program again. But he tracks inflation using government statistics. He goes back to the 80 and 90 measurements where they didn't have all of the modifications, the hedonic adjustments and the geometric weighting and all that garbage, which basically, and the lack of energy prices and housing and stuff that mutes inflation now in the CPI. CPI is not a real number. If you go back and just look at raw price increases, basically the 1980 numbers do this, you can see that inflation is pretty high. In fact, it's been tracking about 10% average dating back to about 2001, based on the government's 1980 measurement, where they didn't have all those goofy adjustments to inflation. And that's a lot higher than what the government's reporting. So I would argue we've had persistent 8 to 10% inflation basically for the last 20 years. It shows in the Shadow Stats numbers. I actually did studies for my book as well, which if you subscribe to the website, another benefit of subscribing to my website is you get a free copy of the book. And in the book, in chapter 2, I spent 50 pages talking specifically about government statistics. And I blow the CPI out of the water using their own data. I use their own data plus some studies by some independent people, plus my own study to show that CPI and a lot of those other numbers like the unemployment rate are basically bogus numbers, and the government's misreporting them. And it's hiding what's really going on in the economy. And I show you how to find what's really going on in the economy in the books. It's a really good lesson on that. So if you're interested, go sign up on the website as a subscriber and you get a free copy of that book. Anders, Ajar asks, what do you think happens to the big tech companies during a currency debasement scenario? Well, I think the same thing happens to them that happens to everybody. In a currency debasement scenario where the currency is rapidly falling, all the prices are going to get higher, including the stock market. The problem is that the raises in the prices of those assets, which have been previously inflated by all the currency printing, rises at a much slower rate than the overall inflation rate. So you lose your money. So what happens is that's a financing arm of every business is stock. When they issue stock, it helps them raise money. Not only that, but interest rates tend to go crazy. Interest rates will tend to rise because you have so much risk in the system. So the cost of borrowing debt also goes up. So that's going to hurt every company. Any company that's debt dependent or stock proceeds dependent, which they all are going to get hit hard. A lot of the utility companies get hard because they're heavy debt. Telecommunications will get hard because they're heavy debt. Technology companies, which rely on stock issuance, are going to get hit. It's going to be harder to raise money. They're going to be constrained in their R&D, and in tech companies in particular, where R&D is basically your lifeblood. It's how you grow your company. With your technology, that could be a big, serious hit to tech companies, but I think it'll be a big hit to companies overall. Robert says, do you think the massive China Belt and Road project will increase the demand for gold and silver? Silver especially, because silver goes into so many things. So we'll go into equipment used to build that Belt and Road economy, and that Belt and Road project China's putting together connects 73% of the world's economies. What's really going to increase silver is going to be the EV economy, the green economy, because silver is such a green metal, and also the space economy. We're building out into space now. We've got contracts to build, stuff on the moon. People are putting satellites up. That's really going to drive silver as well. And I think gold will just continue to rise because it gets used in anything computerized. Gold gets used in motherboards and computer applications quite a bit, and it's also a hedge against inflation. So I think as governments continue to print more, and as we continue to move into a technical economy, that's going to continue to pull the demand on gold up, and will pull the price on gold up. What do you say to people who claim inflation will go crazy if banks don't lend it out? Because, well, already we have 10%. So I would say inflation is fairly crazy right now. And I'll also point out there's a difference between inflation and hyperinflation. Inflation, it does have to do with monetary velocity to an extent. And where banks are holding it or it's only going to certain sectors, yes, it does tend to mute the inflation. But the hyperinflation comes when people lose confidence in the currency. When they lose confidence in currency and everybody's just trying to dump it and get rid of it, that's where you get your hyperinflation. And we see signs of that with other countries dumping the dollar in trade contracts. And tying this back to the Belt and Road Initiative, Belt and Road Initiative is not being financed with US dollars, it's being financed with Chinese yuan and Chinese loans. So you're connecting 73% of the world's economy in a currency outside the dollar. So that's a sign right now that people are dumping the dollar in international trade. And that's a big sign that eventually all those dollars are going to flood back to the US. People are going to realize that there are way, way, way too many of them, and they're going to dump them, and that's going to be your hyperinflation. And it won't matter at that point whether banks lend them out or not. It's going to be the people that ultimately decide. The market ultimately decides the fate of the fiat currency. Elon Musk Ox asked, do you expect an insolvency event causing deflation before a currency crisis happens? So yes, we do have deflation. I think we're having deflation and inflation at the same time. They're two sides of the same coin. The deflation comes in the overall productivity of the economy. The inflation comes in the increase in the money supply, which does work its way into prices. We just showed shadow stats there for you. So you can have both at the same time. The deflation is usually an economic event where inflation is a monetary event. They can come together. If you follow Austrian economics, you tend to have a big deflationary event. Then comes the money printing, then the revaluation of the currency at a much lower level than the hyperinflation. That's generally how that goes. It's kind of summed it up into a neat little package, but go study the Austrian economists, and they've documented that over past fiat currencies, and that will teach you how that works. RB has a comment that low productivity is deflationary. So how can we hyperinflate in a low productivity country when no one's working because of government handouts? Okay, hyperinflate, again, as I explained before, is a loss in confidence in the currency. It's not velocity. So a lot of the monetarists, people like Jim Rickards, for instance, and others will come on and tell you that you need high velocity, have hyperinflation. That is incorrect. High velocity does have to do with regular everyday inflation. And again, even with lower velocity due to the pandemic last year, we didn't fall below 10% real inflation, as I showed you on shadow stats. So that is, the velocity is a relative factor in the overall inflation. When you have as much rampant money printing as we've had, you can have inflation with even at the same levels of velocity because there's just more money bidding up the same amount of products and goods. But the hyperinflation is a different story. That has to do with the loss of confidence in the dollar. So it's a completely, and that's what the monetarists miss. And that's why I don't follow the monetarists. They're wrong there. They're objectively wrong in history when looking at currencies. And most of the monetarists say, well, you should have created more debt or you should have created more currency. And that's the exact opposite of what you need to do in that scenario. How long do you think it will take to bring about the digital dollar? Well, I think that's already in the plans because the Fed's already talked about it. They're already building their direct to consumer payment system, bypassing the commercial banks. So when they built all that infrastructure and they don't need the commercial banks anymore, they could pull the plug on the dollar. Of course, that depends on when they're ready to pull the plug on the dollar. Right now, they're trying to support as much as possible. You know, when they have the digital systems ready and they're ready to basically let the dollar fail, they'll do that. But I think they're not quite there. We're getting a lot closer. So I think that's all the questions, guys, we had in the chat. Let's see if we had any others. One comment here from Silverblade says, modern monetary theory equals modern butt waffles. Good comment. All right. So we've had some good comments here, guys. This is the Cowboys Metal live stream. Typically, we do this at Sunday, 1 p.m. Central Time. But as I noted at the beginning of the video, we were out of pocket. We were out in Vegas doing some business and having a little bit of fun poolside, so we didn't get that. So I wanted to do a very special edition of Cowboy Metals for you today, this morning, Tuesday, April 6th. And we're going to wrap it up here in a minute, but we'll do this recurring series every week. We call it the Cowboy Metals because we are here in Texas, the great state of Texas, which has a lot of cowboy culture. So we're going to bring you a little bit of that cowboy culture in this as we continue to go along. One more question, RB. Go ahead and ask it before we wrap up. But we're going to go ahead and wrap this up in a couple of minutes. Wait for RB's question. To recap what we talked about today, the Las Vegas taxi cab economy is telling us that people don't want to work. They'd rather take government handouts. That's not a good sign when they're talking about universal basic income. It means the economy for the U.S. doesn't look as robust and as strong as you may see on the surface. And given the amount of debt and money creation, it looks as though we're at the end of this current fiat system. Last question from RB, should people be worried about devaluation instead of inflation, deflation. You know, people should be worried about protecting their wealth. And I will say this, if you save in gold and silver, you have a lot of upside on their prices given their current valuation. Showed you that chart earlier, gold compared to currency and gold compared to debt. But I think that's what you get into gold and so forth is the long-term save against what's going on in the economy. Gold will track inflation really well. It goes up. You know, if gold understands that CPI is not the real number, it will track the real inflation number. Silver generally goes up. It's more volatile, but when it goes up, it'll go up really quickly. And that's where you get your speculative gains in that as well. Although I do think we're going to have a repricing of silver much higher as it becomes more apparent to people that it's important for the space economy and the tech economy. You can't live without it. I think silver will reach a new plateau. But I think that's what you save it for. Whether, you know, inflation or deflation comes first or which is worse or what the situation is, it doesn't really matter. Gold historically tends to do well during periods of hyperinflation and also deflationary collapses. It does well during both. That data is out there. So I think you'll be just fine either way. I don't think you have anything to worry about. All right, guys, that is going to do it for today. Early edition of Cowboy's Metal here on Tuesday. Wanted to preview a video we're going to premiere tonight. I've got a new company that you guys may want to take a look at. They are mining gold, silver, a little bit of copper, and also some lithium. Lithium is in a major bull market right now. It recovered in 2020. Of course, it's instrumental for the EV market and the overall battery market and the green market. So we're going to talk with that company today. I've got their CEO and one of their board of directors on in a special interview tonight. Stay tuned for that. If you guys are looking at new entries for your mining stock portfolio, you want to explore that's got some really good gold deposits out there in Canada and some lithium deposits as well in a well-known lithium area of Argentina. Stay tuned for that tonight. That will premiere tonight on our channel. Tune into that. Until next time, guys, this is Rob Keynes with goldsilverpros.com.